Lots to talk about right now, from how the rising interest rates, economic tensions stemming from supply chain shocks, and the ongoing geopolitical tensions continue to impact stock markets. How can you at such a time adopt a balanced approach? Let's get started. Our first query right now is from Satish Kumar in Chennai. Let's listen in to which stock he's curious about.
Sir, I bought 20 shares of Wipro at rupees 610. Should I hold it or sell it? Please advise. Thank you.
Well, Wipro's the price action has been quite scary. I think in January it was about 740, 750, and it's now all the way down to 400. At that point, a lot of people felt that the new management from Wipro is finally going to deliver. And Wipro, having been a laggard for the last many years compared to the frontline IT stocks, is finally getting its mojo back. But I think the entire sector has come under a cloud because of what's going on in the US and the huge correction in the Nasdaq. And Wipro has corrected in line with the sector and probably a little bit more than that. I think this quarter's numbers were also, the Q4 numbers were also not great. Very tepid guidance from the management of just 1 to 3% growth. And I think it brought forward some kind of downgrades, earnings downgrades as well. So that might have added to the extra underperformance of this counter compared to some of the other IT leaders. Otherwise, I think Wipro is on a steady kind of wicket. It will perform with the sector. Valuations have corrected very significantly. I think it trades at only about 13 or 14 P multiple. I doubt whether you'll find too many high quality companies trading at that kind of P multiple in the market, particularly in the IT sector. So it's inexpensive, but with Infosys and TCS and Mindtree and L&T Technology having corrected so sharply, investors might equally believe that they have better opportunities now in some of the frontline large cap and mid cap names in IT compared to Wipro, where the growth metrics may not be that strong. So it's difficult to make a very big table thumping case for Wipro, but I think it's too late to sell. You've bought at above 600 and now the stock is 400. I think the time for selling Wipro is gone. You probably need to wait for some better rallies in the company to think of exiting. For now, I guess there is no option for you but to be patient.
All right. Let's go across to Dr. Gaba from Jalandhar, and he holds shares in Hindalco.
Hello, Udayan. I'm Dr. Jasprit Gaba from Jalandhar. Recently, I have purchased 200 shares of Hindalco at the rate of 505. Should I sell or hold it for a period of 2 to 3 years? Thank you.
It's a painful stock to hold on to. I mean, you're already down about 40% on your portfolio, close to that. Hindalco has been a huge disappointment to investors over the last few weeks because at the start of the year, it looked like most metal companies are on a super cycle kind of a mode, that we'll have a multi-year demand super cycle and aluminum and steel stocks will do very well. And then out of the blue, this inflation scare, interest rates going up, every possibility of a recession in the Western world, the China COVID clampdowns, all of that has really completely destroyed this expectation of a super cycle. So much so that Hindalco itself has corrected some 30%. Aluminium prices have corrected 30% from the peak of the year. And that's only one part of it. Even on the cost front, the rise in coal prices is actually squeezing margins a lot at Hindalco. So they're hit on both fronts. Aluminium prices have come down, coal prices have gone up, and in the middle they're getting squeezed. But Hindalco remains a very strong company in the aluminium space. It is just that demand expectations are now severely diluted, both from China and the US, and that puts Hindalco in a very sticky wicket. So when this market has a very strong pullback bounce, at some point it will, you will see metal stocks also rebounding. I would suggest that you probably consider thinking of lightening up your position on Hindalco because of these fears of recession and inflation. I think Hindalco will probably not go on to become the kind of wealth creator in 2 years that one might have thought even at the start of the year.
Okay. Kalpesh Kacharia has a query on Coal India. Kalpesh writes in from Surat. It's interesting to see a lot of queries on some of the blue chips today, or the larger companies as opposed to the broader markets. Kalpesh, take it away.
Good evening, sir. I am Kalpesh Kacharia from Surat. I have 100 share of Coal India at the rate 208. Now my question is, due to power demand and shortage of coal, the coal prices go above $400. Even Coal India increased raw material price by 10%, and but the coal price go up and the share prices go down. So my question is, what should I do? And which level I can average more share for the good return?
Well, to be fair, Coal India has actually not done too badly. I mean, I cannot remember a year where Coal India has had the kind of price performance that it has had this year. I mean, it's been a difficult year so far for the stock market, but Coal India is one of the few shares which is up in the green. In fact, in the last 1 year, I think the stock would be up some 25% or so. So, for a laggard stock to have turned in that kind of performance is not too bad. And the reasons are pretty much what you mentioned, that coal prices have been going up, demand is strong, so much so that Coal India recently even tendered, floated tenders to import coal and sell. So such is the situation of demand for coal in this country. They're not able to meet it. Eventually, I think coal prices will hold up and they'll probably get to sell more through e-auctions, which is where they realize the highest value. And Coal India seems to be in a pretty good wicket at this point in time. And if you consider the fact that the dividend yield on that company is in double digits, some 10-11%, I think the case for Coal India in a current market context is not too bad. I am not a big fan, by the way, of Coal India kind of companies because these are sunset sectors, and beyond the point their P multiples will get constrained by the fact that they belong to a polluting sector and there will not be enough demand for that. So I would imagine this year at least it makes sense to hold on to that company. If you get rallies beyond your price, you might actually book a profit on that one. Longer term, I would say that this is probably not the sector to be in. But this year, with a high dividend yield and coal prices where they are, it may not turn out to be a bad bet to hold on to.
All right, and we do have one query from the broader market. Chaman Suri has written in on Coforge. Let's listen in.
Hello, Mr. Mukherjee. I am Chaman Suri from Delhi. Sir, I bought a small quantity of Coforge at very high price of 37.65. It is now down by almost 300 rupees. And I don't know what further fall it will meet. Should I exit or continue with it? What are the prospects? I can use this money and invest in Tata Alexi, where I am making good money. What do you, sir, advise me, sir? Thank you.
Well, Tata Elxsi is an excellent IT company, no question about that. So, I mean, if you have made up your mind, then it makes for a good investment. Tata Elxsi is also corrected from its peak quite significantly. And as a long-term holding, it is an excellent company to hold on to. This is not a recommendation, by the way, to buy that company. But Coforge too is not a bad company. As you know, it's the former NIIT. The stock has corrected quite significantly. But it remains a fairly high growth mid-cap IT company. I mean, I think they will continue to grow at about 25% over the next couple of years, which is higher than the industry leaders. They have some very well entrenched kind of clients and presence in the travel and in the insurance sector. So it's a kind of a niche mid-cap company which is on a high growth trajectory. But now, because of the correction in the IT sector, Coforge has corrected very, very significantly. And that has addressed one major problem in that company, which is of valuations. Because Coforge has really become very expensive as a company, trading at 35 plus PE multiples, which was not sustainable. But because of this fall, it's now below 20 in terms of PE multiple. I think it's still trading at about 18, 19 PE multiple, which is not exceptionally cheap, but vastly cheaper than where it was trading at earlier in the year. So this is not a great price to be switching out of Coforge either, because it remains a fairly good quality company to be invested in. So I would say both the companies that you speak of, Coforge and Tata Elxsi, while they might be going through a painful period of sector correction, may not be bad bets in the medium to long term. So I wouldn't worry too much if I were you about the small notional loss that I was trading at, if you have the patience to hold on for the longer term. These are good companies.
If you like the video, do like, comment, share and subscribe.